you, friends. So, welcome to the 11th part of the British revenue extortion in Bharat, and we have taken up the case of Tirunelveli district, which is based on, kind of a research article I had published on my blog, and I'll be linking it in the description box as well. So, this is kind of the last episode of the series. But there'll be two more parts which you can watch if you're really interested, because I'll be going into some of the nitty gritties in the next part, especially on the yield per acre and why is it quite important. And the last part will be really quite freewheeling, where I will share my screen. I will take you through how I gathered the data, from where I gathered it, and how I did the analysis. So I'll be showing you my Excel spreadsheet as well, and I'll also explain the logic of why I did what. So that last episode will be quite good if you are interested in data analysis or analysis of historical data, or particularly just you want to know how I got um, how I got to this point in terms of analysis. So let's carry on with this part. Okay, there we go. So in the last episode, we saw, Pakal Durai, so Richard K. Pakal, and his administration lasted almost close to 30 years. Now, in 1905, a new survey was done, and as part of this survey, a few things happened. So land under cultivation, it showed an upward swing, and the reason was, now you had this vast number of people who had been rendered jobless, due to Indian industries closing down, and they were working on these sub-acre plots of almost barren land. So on paper, the land under cultivation went shot up quite sharply, but in reality, most of it was barren, unprofitable, and people were in deep debt to moneylenders, and it was a pretty grim situation. What this forced people to do was to also keep themselves afloat and pay the taxes to the government, or the land revenue to the government. They had to switch from what was known as kumbu. So kumbu is, more of your daily consumption, uh, grain like millet, ragi, etc. To cotton, which was a cash crop. Now, cotton is very resource intensive. So obviously now they had to borrow money, they had to buy the cotton seeds, and the middlemen took all the margins. So they were in deep debt. Now, what the new survey did was they also increased the tax on wetlands. So there was this loophole, if you remember, I mentioned this in the last time, in R.K. Puckle's, settlement, um, where, depending on where your land was located in the village, you could get away with a very favorable kind of land tax. So tax on wetlands, or wetlands means lands which had some water source, so well, tank, canal, etc., were increased by 12.5%. So till the last. So we are talking now about the last phase, which is from 1905 to 1947. Till absolutely then, the British had no intention of loosening their grip and trying to extract as much as they could. And the Second World War period was the period of the biggest loot of India. So I'll create a separate series on that. And they got away without paying us anything. So Puckle's system was revamped to close these loopholes, and the land revenue demand. So I'll take you through this on my spreadsheet, but there are two different things. One is the land revenue demand. So the demand is, the government comes to you and says you need to pay this much tax this year, so 1 lakh rupees or 10 lakh rupees. Now the actual amount you can pay, depending on your circumstances, might be say 8 lakhs. Okay, so the collection is different from the demand. So the government might collect 8 lakhs from you, and 2 lakhs will be in arrears, so you pay that next year. So next year, instead of say 10 lakhs, your demand will be 12 lakhs. So the land revenue demand spiked to 25 lakhs, 56,000, from 22 lakhs in 1910, just in a span of a couple of years. Because on paper, the land under cultivation had gone up, and the tax loopholes for wetlands were closed as well. So obviously there was this massive spike in demand, and people had to pay up. You either borrow or you pay the next year. So there wasn't a lot of kind of leeway. Now, in this last phase from 1905 to 1947, previously what the British occupation was doing, they were publishing these regular settlement reports. where the description of how the land revenue was extracted and what mechanism was put in place. So whether it was Pakal system or whether it was Rayatwari or that Olungo system was very clearly described. But from 1905, I think somewhere around 1910, I don't remember correctly because when I was collecting the data, they stopped publishing these settlement reports, which were yearly, and instead these statistics were published as part of statistical extracts by different departments. So it becomes very difficult to uh, get a clear picture on what was the settlement arrangement done from 1905 to 1947. So I haven't been able to describe much on that, but I was able to get statistics. Okay, so same set of slides, so apologies for that. So we'll move on. So we come to kind of the graphs and charts. So what was the net amount of grain left with the farmer as percentage of average yield? Now if we assume the average yield as we have done as 547 kilos per acre, so from 1905 to 47, roughly he was retaining around say 22 to somewhere around 27% on an average. So the amount of grain he was retaining had gone up, but we have to remember that these periods, so till 1917-18, from 1940-15, you had this period of the First World War, and then everything's prices spiked because you had this kind of a bubble effect, and from 1930 onwards, you had this very dire economic situation where you had the Great Depression going on from 30, and the war years in India were a period of very acute scarcity because everything was rationed. So the farmers, except for a brief period, had a really very hard time. Okay, so the next one. So the net income of farmer. So you can see that this kind of stays between somewhere say 15 and 30 rupees on an average. Now you have to kind of you know account for, yeah, I forgot the word, I had a blank moment. You have to account for inflation. So the rupee value in 1800s was very different to the rupee value in 1900s. So you have to account for that. So on paper it looks like the farmer's income kind of went up and he was earning very well, but in real terms the effect wasn't that great. So if you normalize for the 150 or 147 year period from 1800 to 47, the income of the farmer had pretty much stagnated, and these land holdings, like I said, had become acre and a sub-acre, so very unproductive really. Okay, and so Raitwari land revenue as percentage of average yield per acre. So percentage of average yield per acre paid as land revenue, it kind of fluctuated between 4 to 7%. So it had come down, but again, you have to remember that the costs of cultivation and so on and so forth. So things had gone a little bit better, but by this time, the entire fertility and the human resource, the material resource of that district was at a rock bottom level due to almost these 100 plus years of completely savage extortion. Okay, so this kind of concludes this whole thing. So in this series, we have looked at almost 150 years of data. And in the next part, which will be a very short video, I'll talk about the concept of the yield per acre and why is it's important. And I'll also present statistics from two different papers, two different studies, which illustrate the importance of that. And the last part, like I said, will be all about how this data was gathered and analyzed. So friends, if you have enjoyed this video, please do remember to like, share and subscribe. And I've also started uploading videos on mantras and stotras recited by my father, Professor Idneshwar Shastri. So please do have a look at those videos as well, and I will see you next time. Thank you.